This last one is one of these gotcha patterns. I call it the megaphone pattern. And when these will happen all the time, they're easier to spot on a 4-hour because this looks like a lot of random choppiness. That consolidation on a 15-minute or 1 hour that David tries to stay away from. So if you see this happening, just know that until it breaks out of here, it pretty much you can anticipate it to be extremely random, move in any direction at any time for any reason. I have personally experienced that Fibonacci doesn't work as well inside of these megaphone patterns, nor will support and resistance. And what I mean by that, if you look at this one, that was a support level. And right here it would have held. You could have this would have been a great failed breakdown. You guys see this line?
Yeah.
So let's say I had that as a support. This is a failed breakdown, just like we did that failed breakout. Comes down, they're running stops, they trap the shorts, they run it back up. They come down, they did it again. This time they ran it a little further, okay? But you're not trading below the line. You're waiting to see if it comes back above the line, okay? So this is right at 4,000, price level 4,000. So this has been a while ago. Does it again, comes down even lower. We're not doing anything below here unless it touches the line. In this case, that line didn't exist yet. Sometimes it'll take a few days to actually recognize these. And sometimes you'll see the top first or the bottom first, and they may not always be easily to identify. But once you see these, put them on your chart. And once price is inside of here, you're looking for failed breakdowns, failed breakouts. Like for a while, that was one. So now inside of this megaphone, if you want to trade it, like I said, stay away from the fibs and find support and resistance. So here's a failed breakout, meaning it went above here, comes back down, give it 4 to 7 points, trade it to the downside. Okay. Another failed breakout above the resistance level, comes back down, give it 4 to 7 points, trade it to the downside. Now you can fib for trade management off of here. Okay. Another failed breakout. We're not doing anything once it's above there. We're waiting to see if it comes back down below. Another one, this one is more like 30 points. Comes up, but it comes back below it. Okay, once it gets below this level, give it 4 to 7 points, trade it to the downside. Okay, down here, there's nothing to do once it gets below there. You're just waiting. You're just waiting. Doesn't hit this, nothing to do. Actually comes back above there. Could I trade this, in that next 4-hour candle or 15 minutes if that's what I'm charting it on? Yeah, but you wait for it to get 4 to 7 points above there, trade it up to the top. And we get another failed breakout. So you see how many opportunities, that's what, 10 opportunities already, on a 4-hour chart. And you can do these whether you're trading your own personal account or a challenge account or a funded account. It all works. There's another failed breakout. And then at some point, it broke below here and, so it hasn't back here, but now we could trade the bottom of this. Could we? Absolutely. And maybe you take it back up to there because that's where it turns, seemed to turn in no man's land. Okay. And you just keep adding support and resistance. And there's really no tendency as to which way it'll break out, but eventually it will break out. So that's when I learned the hard way, because it took me like 2 or 3 weeks to figure out, because it was in a very, very extended, and this could go on forever. Keep bouncing up, keep bouncing down. It took me about 2 or 3 weeks to figure out. I was like, why are my fibs not working? Like something's wrong, and I couldn't figure out what it was. And then I happened to notice, well, wait a minute, there's a trend line going up here. Then I saw a trend line. I'm like, oh, that looks like a megaphone. And then I Google megaphone candle chart pattern. And sure enough, it was a thing. I didn't invent it, but I happened to recognize it. It was never taught to me. But then I self-taught myself, okay, I saw this. And what most traders will do, they'll just trade the edges until it breaks out, because your fib structure is not really going to work well inside of here. And it can be very, very, very random moves inside of the megaphone until it breaks out. But now you have another entry that we talked about, the failed breakout and the failed breakdown, that basically gives you trading opportunities into something where everyone else is waiting for an edge. They're waiting for the bottom, or they're waiting for the top. So again, using this level of precision, we got more opportunities where other retail traders might not get.